All right. In this session, anything that you guys need to this is a random session, right? I don't have this planned, obviously. I'm just gonna cover whatever comes into my mind, okay? And then we'll go from there. And so first, let's just go over the charts, and those that cannot attend, obviously, I'll post it later. These are daily gamma levels, which I'll also go over later. There from spot gamma. Well, let's just zoom out to the daily or the chart on SPX. So a little review, which it's been a while since we had this review, right? I don't look at too many indicators, but just the price overall, right? And maybe let's okay. So first we'll do a daily. So we know we came up this year. We were riding the market up from COVID. This move right here, this move that took place during COVID. Personally, I don't count this move at all. I really don't, because this was a completely different scenario that took place and why it happened in the markets. Okay, it was a completely different scenario, and a lot of the things changed. All right. So for me, technically, if I look at the market just grew. All right, from 2018, we were sideways for some years. All the for in 2018, then we were kept growing from 2015 back here in this market, and we have only seen growth. We have only seen growth in the markets. Okay, and now based on certain things, market was, I think, running ahead of itself. Right here, we started giving bearish signals, and something that if you attended pre-markets back then, this was a very given toppy level, and I'm very proud of myself, LB, T. We were It was a good prediction. So the market came down. We came down a lot. We had these nice little V-shaped recoveries back then. Then we sold off big, a nice V-shaped recovery, sold off big, and then we recovered back again. Now this pattern right here, this is a rectangle pattern, right? I mean, something that we should realize. We're basically in a chop for the last since May. So in another 2 months, if we stay in this zone for the last 1 year, we're technically in a chop, guys. The market is not going nowhere. We're technically in a chop. Something very important to understand here. All right. Before you think of all-time highs, we need to break out of this box, up or down. All right. Up case scenario, it depends on the rates. Treasuries, if you follow, right, bond market, there's a lot to learn, right? LB is putting a lot of work into this. I know he's been reading a lot of books. I've been putting in a lot of work up, trying to understand picture at a bigger level. And if we go on the weekly basis, right, again, you can see, right, a huge sharp upside. And now we're just basing here. Personally, I think maybe we might test this zone right here, but obviously we don't have to. If Fed changes something or we have something that we can definitely break out higher. At the moment, we had this low, right? If I put the averages up here, there's a weekly chart. This red line is the weekly 200 MA. All right. This red line is the weekly 200 MA. We basically just came down to 200 MA on the weekly, tested it after COVID and then 2018, and we reversed right back up. All right. Now let me just clear these drawings. Let's go on the monthly chart. Let's go on the monthly. What happened on the monthly? We had intense growth all the way from 2009 crash of the financial crisis here. We had a little rip here. Obviously, then we came back. A big happened. A lot of charts going in the market, which is comparing year 2000 right here, right? There's huge downside, this move. Technically, if you look at it, we had a huge upside swing back in 1984. The market was trading at 167. I don't know how many of you guys study these historical charts, right? But now in the last 40 years almost, if I go in 1980s, the market has gone up from 150-ish, or let's just say 200, all the way towards 4,800, right? How many multi-folds is that, right? How many multi-folds is there in the last 40 years, right? That's insane, okay? One day I think we'll be trading at 10,000 in our lifetime, obviously, maybe even higher. But for now, and then from year 2000, things got a little out of hand. We were sideways for how many years? 14 years, 15 years. All right. So technically, on a bigger picture, if you look at it, this breakout had just started last decade, right? Only about 10 years ago, I would say. All right. In 2013. All right. That's when we broke out of this pattern. And if you draw the Fibonacci levels on a monthly basis, I will not do them right now. This upside can last a lot longer. Okay. So there are different scenarios that we can always work out. All right. And on the monthly, we tested the 50 MA. This blue is the 50 MA. And then 200 hasn't been tested for a long time. Can we test this in the coming, maybe, let's say, for example, I don't know when. Maybe we either test it now or, by the time this average catches up, obviously, these high averages will merge in as we go into every month. Maybe this year, maybe next year, we might come and test this 200 MA and then we go back up, right? Or maybe we just nothing happens here and we rip straight up and go down. Personally, I think we're gonna test this in the coming months. Just the way I'm just looking at the common man's pocket, right? I think eventually in the next coming months we will test this. That's why I'm not in a rush. So I'm just slowly adding some small equities that are in play. All right. And so this is a monthly chart. We bounced off the 50 MA on the monthly, and then the weekly we bounced off the 200 MA. All right. And now, if I go on the last week's chart, we closed right under 50 MA. We had this little breakout, but it completely failed. On an algo level, if this was really bullish, we should have held above it and continued the uptrend. Now we're below it. Do we come and test the 200 MA again in the coming weeks, right? And then if these merge together, then we'll see what happens, where we go. Now, speaking of SPX, let's go on the rates, US 10-year rates. These rates, if these rates break out, guys, if these rates break out, all right. Now, the last time the rates were here, the market was a lot lower, as you guys know, I think, right? If you compare it, the market was lower when the rates were here. So does the market have a sharp downturn right now, or do they hold? And what happens here? If the rates continue going up here and we break out, right? If these 10-year yields, if they keep going up and we break out, I think market has more downside coming in SPX, obviously, right? If the rates stabilize here, whatever happens, then we'll see what happens. But if the rates come down, that's obviously supportive for the indices, right? So that's something to keep an eye on. And if you want to understand more about rates, why these things matter, or how they might why they impact the markets, please do your research. I would go more into depth and details, but then that will take an entire 1 hour, right? A dollar also, a weekly basis, we're just right here, the 105 level. My target on DXY, which I've been saying for some time now, is the day we get above this 109 zone, the day we get above the 109 zone on the dollar, I think this is going to cause some panic in a global scale. All right, when the dollar really goes above 109, if it happens. If it doesn't, we might even retest here, come back down. Weak dollar is supportive of the markets. Strong dollar is obviously a weakness for the markets. Okay, so keep an eye on the dollar as well. All right, UB, the bonds, LB usually covers these, but let's see if the money. Okay, so this is they had this nice little reversal back in October, but I think there's funds outflowing of bonds again, right? And bonds are usually the safe haven, right? If there's no money going into bonds, then the market likely stays weaker, right? But obviously, different business cycles. Can the bond market come down and equities go up? It could happen. You can always compare the charts, right? But if the money really starts coming into bonds, then that's people believing in the markets, right? So bonds are also pretty weak lately. And one chart that I want to go over, of course, is Tesla. Let's just go over the monthly or weekly charts on Tesla, guys. Huge downside we had. Great support level back in around these zones. I think I used to cover Tesla. But you know what is going to come back to 300s. People didn't believe, but this is just a chart. Look at this chart, right? This chart is nothing, but it was an opportunity for people that were in here, right? It was an opportunity. They had this huge squeeze that went on, and distribution happened. People took their profits. The thing with this name is people are still in love with this name. I'm not against Tesla. I myself want to buy a lot of Tesla stock in the future, in the near term, okay? But this chart is a very clear pattern. This, I think, goes down. I may be being a little biased, but I do see Tesla breaking these lows in the coming future whenever, unless some fundamental news come. But no one thing, if I have to buy Tesla calls when it's trading here and I see fundamentally that, you know what, this trend may change, I will buy calls for the upside or buy equity if I have to. So I will change right away if needed, okay? But on a weekly basis, this is a very choppy stock, man. And those of you, I'm covering Tesla for different reasons here. If you play names like Tesla, take your profits, don't fall in love with the name, right? Just some psychological notes I'll also give along with some other notes that we'll take. Don't fall in love with any stock. No company, no stock owes you nothing. Fall in love with it for long term on fundamentally valued names that are trading at a great PE. Go ahead, fall in love with those names, invest as much as your pocket allows for the coming future. For example, I'm buying Amazon here and there. I'm buying some Apple. I'm starting to buy some Home Depot. These names slowly in my portfolio, the names that I personally believe in have a long way to go. Tesla, I do want to buy really, but not here. Personally, it's just my own opinion, not here. But anyways, bottom line was don't fall in love with any stock. If you fall in love with a stock, this will take away your attention, right? You will lose on other opportunities, lose on other opportunities in the market, right? Be realistic, right? These are just some of the things that you need to know. Again, this is a completely random session, as I think whatever I can cover, I will cover, right? You will lose on other opportunities if you fall in love with any stock, all right? Because you will be missing out great opportunities. Trade these names, trade these names, take profits, and who gives a fuck after, right? That's it. Take your profit. These companies don't owe you anything, right? Musk is not going to come pay your bills. So if you bought calls here and you were up huge, take your profits, right? A traded investment is obviously different. If you're fundamentally you agree with the name and you want to be long, that's completely your decision. But when trading these names, take your profits. Okay. I just want to go over Amazon as well. I think this name is a nothing but an opportunity. Now, this right here for future purposes, Amazon, nobody loves Amazon more than me, at least in our group. I know maybe I'm one of the top 1% who loves Amazon stock for long term. But last year here, I really wanted the Amazon breakout towards a 4,000 pre-split. Now, I realized very fast, right? And you guys were I think all of you guys were in the group at that time as well. I realized very fast around this zone right here that this was freaking distribution taking place in Amazon. The distribution in the last few months before this move down happened. And then Goldman Sachs came with the 4K pick. My comments are still there in Discord. All these things, these are top picks for the year 2022 and blah, blah, and all these things. And man, that was the biggest turnoff for me because fundamentally I saw that with the rates and with the way the market was going, that they were going to dump this thing, right? And those news were super bearish. And I'm just proud of myself for seeing this move before it happened. The question is, I have started buying this name personally. I think it's at a very good value here at this zone. This is a very strong support level back in 2018. And Amazon is definitely doing a lot better numbers than it was in 2018, right? It's doing a lot better numbers. It was, if we compare it. And now my next add-ins on Amazon will be around this zone right here, which is roughly the 65 bucks if that happens. Can it happen? You bet. If the market really goes down, I will buy it again at 65. And that's it for me. I'm done adding Amazon after that. I'm just going to leave it in my long-term portfolio and whenever the growth comes. Because if you go monthly on these charts, these names can go down a lot more if needed. All right. And I think Amazon monthly 200 test is coming in the coming months. I am personally waiting for this name. I am personally waiting for this monthly 200 MA touch. It will be after one of the first times, I think, right? When this 200 MA touches on Amazon, I will probably develop my size on equity. I will sit quietly. I think that this will be one of my biggest signals for Amazon bottoming near the monthly 200 MA if it takes place. But yes, I am already adding this name. Apple as well. I've started adding this name as well. But on Apple, I believe a bigger downside can happen. I added some at 120, or what was my ad? I think I did post in the group. I forgot what my ad was in Apple. So I added my first scale out. My next scale out will be the monthly 110 level, right? This is roughly this zone, which is roughly 110. And then my ad after that will be 90. If we get these numbers, if we don't, that's fine. I am slowly accumulating here because I don't know. Maybe these things just reverse back up and start going again. I don't know, right? I wish I knew. But the best I can do is the companies I personally believe in, I will keep on adding small into them, right? Home Depot, for example, starting to add a little bit of equity at the 50 MA on the monthly. If it comes down further, if economy really gets screwed up and these names come down a lot, then hell yeah, I'll buy more, right? But again, that's long term. Now coming back to my let's head towards a little towards the trading side. Now, when trading options, guys, one thing I will tell you over and over, it is very hard to follow. It's one of the hardest things to follow. In fact, I have a lot of trouble following it myself, even until today. Even though I give you guys guidance, I teach you guys. At the end of the day, I'm a human being just like you guys, man. I got emotions just like you guys. But one thing I finally picked up on, one thing that's finally helping me in the markets, is managing my size. Managing my size is the only thing that's helping me in the market, along with some patience. Do I lose some patience sometimes? You bet. It's hard, man. Like last week, I had no trades, but the week before that, I had 6 trades in one day and 3 the next day. right? From which I did only 5 trades. The rest I missed my entries on, so I did not chase them. But I nailed the last 5 SPX plays I called, or 6. I nailed all of them, right? And I do them live with you guys. Managing my size, being a little patient, emotions, control as much as you can, right? I mean, no human is strong enough just to be fully, I mean, I try my best, obviously, to control my emotions as well. When the money is involved, is our hard-earned money, emotions eventually do get involved. And sometimes what happens is, let's say, for example, if you're starting with a $2,500 account, now this happens with all of you guys, I bet. Let's say you're starting with a $2,500 phone, $2,500 account. You take this account somehow to $3,500. Now you're a happy guy, right? You're making good money in the markets. You're happy. Now you're becoming so positive in the markets. You think you're going to take this account to 50K like in the next 1 week. You start getting these feelings. The market makes you feel like that. It makes you feel so damn good, right? So what you start doing is you start taking $500 plays. You nail that too. Your account now goes to 500. You're on top of the world, man. That's it. Like, you're going to become a millionaire next month. These are the feelings that you start getting. The moment you start feeling like you're going to continue making profits like this, you have fallen into the traps of the market. They will take this $4,500 back from you so fast, you will not even realize it. I've done this many, many times in my life. What you're going to start doing is maybe going with $1,000 into one position. You're going to have another position for 500. You'll have another position for 300. You'll have another position for maybe another 250, and you'll have another position for 150. You're now in 5 different positions. What do these positions equal to? Let's count. 1,000 plus 5, 1,500, 1,800, 2,050, 2,200. Correct me if my math is wrong. 2,200. Whoa, man, you only have how much money left in your account cash now? $2,300. You're at below 200 below your principal. 200 below your principal. You don't even realize this because you're at $4,500. You're right here at the $4,500 mark, right? You're right here at the $4,500, but in this excitement, you're forgetting the positions you're taking. You're forgetting to do the math. You're at $2,300 cash in your account. Now, what you're looking at in your account is the total equity part. Oh, my total equity is worth 4,500. It may fluctuate down to 4,300 based on the positions going down, or maybe your total equity might show you 5,100. And this is the biggest misconception, you can say, right? Or the most deceiving part in the market. Man, this $1,100 is not yours. All of a sudden, you wake up one morning, you're likely playing one side in most of these positions. You might have 4 calls or 1 put, or 4 puts or 1 calls, right? Most of the times your portfolio will be leaning to one side in options trading. Next morning, you wake up, all of a sudden, market gaps down. Unfortunately, this $1,000 is in calls. This is in calls. One is in puts. All of a sudden, your total equity is now showing how much? Maybe 3,400 bucks. You're down 1,100 on the next day. Now you're sitting there with what? Hopes. Now you have hopes. No. Let my account go back to 4K. I'll exit these positions. Oh, you know what? I'll stop out at 3K. If 3K happens, I'm going to stop out. You don't even have no technical plans. And you know what? All these facts I'm talking about, you guys go through this, man. You know why? Because I've been through it the last 10 years many times, right? You guys can probably relate this with me as I'm speaking. Do let me know in the comments. And now you're like, no, I'll stop at a 3K. I'll still be up 500. Now you're starting to compromise with your account. Oh, no, I'll be up 500K. I'll stop at a 3K. We come down to 3K. Now you're like, no, I cannot sell these positions. What if the market comes up now? What if the market comes up now? What if the market comes up now? Unfortunately, you got another gap down. These positions, whatever happens, you're back to maybe $2,700. Now you're back to $2,700 in your account. You gave away all this money that you may have made with discipline, whatever it may be. You're now at $2,700 in your account. What are you going to do now? Next, what you're going to do is revenge trade. It's going to come. You're going to revenge trade. You're going to try making back this account back to $4,500. You're going to revenge trade. You're going to be like, no. You know what? Let me take a $1,500 position. You know what you start saying to yourself? You start telling yourself, let me take a $1,500 position. I'm going to double this. It's going to go to 3,000 plus the other blah, blah, blah. And I'll be back at 4,000 plus. And now I can start again from this $4,500. By the time you do this, that $1,500, I can guarantee you in options trading, is gonna go to zero. What makes you think you're gonna double this, bring this back to 4,000 just because your emotions are now stuck with this $4,500 level? You're gonna put down $1,500, but this most likely is going to go to zero. What are you left with in your account? You're left with $1,200. You know what now? This $1,200 now, you're gonna take these for granted. You're gonna hate this amount sitting in your account. You're gonna be like, I'm sorry for my what, you're gonna be, fuck this. If this goes to zero, it's okay. I'll start again from zero. You don't even care about these $1,200 no more. Am I correct? This happens. You don't care about this $1,200 because these decisions that you made has screwed you up so badly. This $1,200, now you're starting to take it for granted. You don't even care that you have $1,200. You don't want to manage this no more. You're gonna take some stupid lotto trade in hopes of going back to $4,500. As soon as you start feeling like this, stop. Please stop. As you know, don't make these mistakes. These emotions come in, and I think most of you have been through this. As I speak, you're not the only one. Every trader in the market goes through this. Guess what, guys? Most of the trades you will take in this market will be right. It's just that your position sizing will be off and some emotions, and your account goes downward, even though you're right more often, because you won't be able to hold the winners for too long. Either your size is up or whatever it may be. So if you can put some discipline into your trading, it's going to help you. How patient, my patience is only increasing and increasing day by day because it's helping me. It's hard to be patient, but it helps. It helps. Sometimes you have to sit there and take no trades. It's part of the game. If market was so easy to trade, everyone would make money, right? Everyone would make money. So discipline, waiting for your type of play, that will help you. And again, as I do this session with you guys, this is helping me as well, right? Out for refreshing my mind. I try to read as many books as I can. I try to watch as many tutorials. But at the end of the day, account is yours. Only you are liable to pay your own phone bill. No one's gonna come and pay it for you, right? So just like you protect the money in your work money, protect your accounts, guys. Protect your accounts. All right, you protect your accounts. If you sorry for my spelling mistake, protect your accounts. Goal is, I say this often, okay? Goal is to what? Last in the game. If you last in this game long enough, you will come out a winner. I promise you. It may take 1 year, it may take 2 years, it may take maybe 10 years. But when the rewards start coming in and you learn, it's worth it. All right. I do have some bad weeks, sometimes bad days. It happens. But I make sure that tomorrow when I wake up, I can stay in the game. All right, that I can stay in the game. For example, I'll take some minimum levels. If you're starting your account with $2,500, if you always have $2,300 plus cash in account, you will last in the game. You will sit there. You will be able to make plays. And don't fall in the trap if somebody keeps calling out winners, or sometimes the group, somebody just goes on a streak. Anyone, or I've been there, like many of us have been there. We just go on streaks. Don't feel left out. Don't be the person, oh man, why is he making so much money? Why can't I do it? Don't do that, right? I mean, no two people are the same. Even at your job, the money that two of you make, you all have your own different expenses. You don't both save the same amount. One saves and one might be going in more debt, even though your income is the same. So don't think like that, okay? If you have a $2,500 account, 2,300 plus, you keep cash, man. You only play $200 on options. If you're disciplined with this $200 alone, you can grow this account from 2,500 to 2,700, maybe back to 2,500, maybe back to 2,250. But if you're disciplined, you will eventually take this to 3,000, and then you'll eventually take this to maybe 4,000. All right, then you'll eventually maybe take this to 6,000. But you gotta start small. You gotta keep majority cash. Keep majority cash. And one thing I'll tell you guys right now, which I see over and over, if you take a $2,500 account to $10,000, let's say in 2 weeks, If you don't manage your numbers, I can promise you, I can bet my life this 10,000, this 10K is going to zero fast. This 10K will go to zero fast, even if you do take 2,500 to 10K within a week. Unless you hit a super lotto. Now, let's say, for example, we're in SPX or something happens, right? You take $200 to $1,000, man, you're blessed. You went from 2,500 to 3,500 fast. You're blessed. What you do now, you make sure that you have $3,200 cash at all time. You stay cash positive. You keep $700 plus. Play with that $300 only. That's it. You can do a lot with $300. There's a lot of 50-cent options. You can buy 6 contracts and scale out 3.5, or maybe be able to stop out, right? But don't take 2,500, 3,500, and now you're taking $1,000 positions. You're gambling in the markets. Don't gamble. You don't win in gamble. 1 out of 1 million people, only one wins in gambling, right? And they end up giving all that money back to the casino again. So don't gamble in this market. You'll just waste your time. Okay. Let me know in the comments what else you guys want me to cover. So that was some position sizing that I covered, which I think is a very important part of life if you really want to last in this game. And now on SPX, I don't like the volume bar on trading view. Unfortunately, I won't be able to open my platform now. Or else I will show you guys how I work with these candles and the volume and stuff. It does help a lot. This 5-minute candle was nasty. Let's put these gamma levels up from Friday, right? So we did have and guys, when playing with these gamma levels, I put this a 5-minute chart. Let's do 15-minute, right? Let's do a 15-minute chart. And I'll remove these averages. Okay. Now these gamma levels change every day, but they're usually nearby or close to each other every day. Okay. One thing, but some of them gamma levels, the large gammas, they usually remain the same, but then in between they do change. If you're doing scalps or anything, these gamma levels work beautifully, man. Look at these gamma levels, right? I mean, even if we go in the past, you can see the resistance, support, how accurate these are when they adjust. Every time we approach a gamma level, we either come down or we adjust and then break out, go to the next one, come down. You'll see this is from January 23rd, and these levels from other day are still perfect, right? And so these gamma levels that I post in the morning, these are from Spot Gamma. They're not mine. I do calculate mine the way I do. Sometimes the supported numbers that I give you guys, those do require calculation, which I do on my own every day, right? With time as it goes in the daytime. But here, for example, that day, if you were in puts from these days came, use these gamma levels as good support and resistance to manage your profits. So if you had 2 contracts here, I will sell one for profits if you're up heavy. And if the market goes back up, I'll just stop out. And if we adjust here and continue lower, then that's a whole different story, right? So I do use, and plus we were at a put wall. They tried breaking down, but we didn't. Okay. And let's see what happens here now, where we go. But I do use a lot of these gamma levels, and I do love the 1-hour candles. There are certain 1-hour candles which I follow a lot, right? Let me see which ones I follow if I can see some here. This is one of my favorite candles on the hourly. These candles right here, these are one of my favorite candles. This candle, when it makes this candle hanging man at the top, not at the bottom. At the bottom is usually opposite, but when these candles take place at the bottom, sorry, at the top, then I know resistance is there. Now we might next 1 hour we might go down like we did here. But as soon as I see that they're rejecting it here they're rejecting it, and they made this reversal candle right here, you can take some scalps. Because in the next 1 hour we had how much of a move down? We had almost 25-30 point move down on the next 1 hour candle here, right? So that's how I use these candles. When I do use them, I don't use them all the time, only when I see them at the bottom. When we have this candle, we're trying to break down, and we have this candle right here, right, where the opening price is and the closing price is the similar. Like we go back up, we go up basically here, the buyers take it up, they bring it back down, then they settle where they basically open. And this happens when we are at a trend. This usually means a temporary trend change of this candle when it takes place like a V shape. Very likely the next price level up is going to be up, and this is when I match this with a call flow. Okay, this is when I match with a call flow. The only time I avoid this candle is when we go, if this candle breaks the low of this candle, then this candle turns bearish. All right, then it's sorry, I can't type right with this. That's when this candle turns bearish. But if we hold above these lows, then this candle is most likely a bullish candle, and we can look at more examples here at the bottom when it takes place. Let's see if we had one here. No. Here, nope. We need a long wick. bring it along with where is it? Where is it? So we had so this is one. Somewhat similar, no. No. This right here. Let's compare flag. This was my next day. But you guys get the point to whenever that candle comes right at the bottom. Okay. Right here we had one in instant where the same thing almost happened, but here we did close green, which is good, and we had an up candle, right? Right here at the bottom, perfect. Now these opportunities are not going to be there every day. These come only once in a while, and then you can cash 15, 20 points to the upside. Okay, so that's one candle that I live for. I really look for them. They don't happen every day. It's only once in a while they take place, right? And then obviously you can always, now this is a 1 hour chart, then I also look at the 4 hour chart, right? 4 hour charts also have it. Let's see how we are looking here. So we did have this dark candle. Now we're just trying to base here. We know that there's a lot of support here. So we might even chop around this zone here. The question is, when do we break down, if we do break down here? In the 4 hour, we are in a chop zone. Let's see what happens. No comments here for now. Right. Any questions you guys have, guys, just type, right? Because this is a random session from my side. Like, I don't have anything planned. I'm just covering things. And sometimes what you can do, if you know strategies, I'll cover some bear spreads here, for example. Let's say, for example, you know we are at put wall here. So on one way that you can make money is if we break below the put wall right here, right? You can sell some credit spreads here if you're in some calls. So you can sell some bear spreads. How would that work? So you can sell some bear put spreads, for example. So how would bear put spreads work? Let's say, for example, if we break at the 39.45 puts, but we know that 39.50 is a put wall, it won't be easy to break. But you have some calls, or no, sorry, if you have some puts and you want to hedge against those puts in case the market reverses, what you could do is you can sell the 39.50 puts. Let's say they're going for 10 bucks, and you can buy maybe the 39.40 puts. Oh wow, buy. You can buy the 39.40 puts, let's say, for example, $5. So how does this work? How does this work? So you get $1,000 credit in your account, like the premium that you collect, all right? And then you pay back the $500 debit because you bought the 39.40 puts, right? So you give $500 back, and now you're keeping $500 in your pocket. And what's your break even, right? Your break even is 39.45 or plus, right? Because you sold these puts, so you want SPX to stay above 39.45. And let's say it goes up 10 points or 15 points, and you want to lock in some profits, right? Let's say SPX is trading at 39.60, right? Let's say it trades at 39.60. How much will your 39.50 puts be worth now? These are just random numbers I'm giving you. Obviously, are not exact, but just so you get the basic math for the spreads. The 39.50 puts will now maybe worth $5, and 39.40 puts may now be worth $2.50, for example. So how much is this spread worth now, right? If 39.50s are worth 5, 39.40s are worth $2.50. So you collected $500 here. They're still worth 500, but these that you bought are 250. They're now worth 250, right? So your math here would be 5 minus 250, and the spread is worth 250, which is 250 bucks. You collected 500 bucks. You can buy this back for 250 and keep the 250 profits, right? And what are your max losses here if this was to go in on max loss? Well, let's say if you have other puts, so they will go up. But here your max loss is also defined because the value of the spread total is only 10 bucks. The difference between two strikes, 39.50 minus 39.40, which is $10 only, right? Because if SPX was to go down to 3,900, for example, let's say, for example, the 39.50 puts will be minimum 50 bucks plus whatever premium. But because you bought the 39.40 puts, right? Remember, you bought the 39.40 puts, they will also be worth how much? At least 40 bucks, right? So the intrinsic, so your max loss will always be 10 bucks on this $10 spread, right? Again, to know more in detail, there is more to it. I do have other detailed sessions on spreads, which you can watch in sessions, right? And obviously, work the math is very basic math. Once you understand it, it's not too hard to pick up on these things, right? You can learn a lot. Okay, and that's that. What else? What else? What else? Let's see. What else can I cover? Well, so the daily candle, we do have this, but my only concern now on SPX is the weekly candle that we have is below the 50 MA. We close below the 50 MA, right? And below 50 MA close up, we could trend down unless we reverse right back above the 50 MA. So we'll see. But yeah, guys, math is fine. What I covered basically please manage your position sizing. Please manage your position sizing if you want to last in this game and make a lot of money, right? Position sizing, that will matter a lot. It will help you a lot. The gamma levels, or gamma report I post every morning from Spot Gamma, they're not always correct. Sometimes they are off, but it's good to read it just to see where the market positioning is, right? It gives you a little idea. And lately, as per their data, the calls and puts are at the like all-time lows. So let's see. Any trade review, Ricky, if possible. I didn't do any trades last week, KB, so I have no trades. Oh, I added Nvidia. Yeah, I added Nvidia bear spread and puts. Now this is a weekly chart. Can it keep going? Hell yeah! But this thing is trading at an PE of over 100. With the rates up so high, this is trading at 100 PE, which makes no sense. Now, can Nvidia keep going higher? Hell yes. But this is my gut. The reason I bought so much time on this play, because even if we do end up testing this break at a 175, 180, I will get paid nice. So basically on Nvidia, what I did was I bought some naked puts. I bought some naked puts far out, as you guys know, with LV. But I also sold some premium up above here. I sold. So so KB, let's see the bear spreads I did on Nvidia. Why did I do them? My strikes were 230 and 250 on the bear spread, if I'm not wrong. So I did 230 and 250 bear spreads, right? Let me just quickly look into the Discord. Hold on. So I did 230 and 250. Okay, yeah. 230, 250 bear spreads for May 19th for $8.80. Now, first of all, what's the max value of the spread? Is 20, right? Max value is 20. In this case, what did I do? These are bear call spreads I did, by the way. What did I do in this case? So what I said to myself, forget Nvidia going up, forget it going down. Very attractive zone here. We did try rejecting the last 2 weeks. So there were sellers here, right? They just put this up with the earnings. So technically for me, the move is weak. Even if we consolidate here for some time, or we come back here towards 204. Oh shit, where did my text box go? God damn it. My text box. Anyways. There we go. So I did this bear spread, right? I copied that from Discord, my alert. So basically here, what I did was I sold the 230 calls. I don't know what they were going for at that time. I forgot now, obviously. But let's just work with the math. Let's say the 230 calls were maybe going for 25 bucks. So I sold these for $2,500. Okay. So I got credit. To protect myself, tomorrow if Nvidia goes to 300, these 230 calls will be trading at 70 bucks minimum. I cannot afford that loss, right? That's way too expensive. So I want to protect myself. So I bought the 250 calls, right? So to work out this math, these calls would be going for roughly 1620, right? Yeah, 1620. Okay. So now 25 minus 1620, what does that equal? $8.80, correct? $8.80 I collected in premium. Okay. So $8.80. So now the break even on this, what's the break even on this? 230 plus the premium I collected. So as long as by expiry Nvidia is trading at 238 and 80, I will be in profits. Okay. As long as it's trading below 238 and 80. If it trades below 230, I will get to keep all the premium. If it just keeps trading below 238,